Good morning, good afternoon, good evening, guys, wherever you are in the world. It's afternoon for me, and we are getting started with the recap of today's London session, essentially. I'm still waiting to log into my Funding Pips account at the moment. Unfortunately, I couldn't. Oh, well, seems to be loading up right now, but it doesn't give me a connection. That's weird. But anyway, let's start with the recap because we have had an exceptional London kill zone. So we started out this morning on NQ inside the London session tape reading channel, right here on our Discord server. That's what we do every day. And yeah, essentially all we've been looking for is this inversion fair value gap right here. We talked about it all morning long, and essentially that's what played out. I took this trade off the lowest inversion fair value gap after we successfully cleared the previous day's low here on NQ. We closed above it right at the London Open here at 3 a.m. New York local time. Came back to retest this inversion fair value gap, even hit the 50% level. My stop loss was placed just below the 3 a.m. low, and I was looking for a 3-to-1 risk to reward ratio. And then afterwards I took another trade on because we still didn't clear the current high of the day. The Asia session buy side, we saw the retracement, we saw the bounce, we left behind a bullish fair value gap, and I simply put a buy limit order right here on this highest bullish fair value gap for the continuation higher. So that's a total of 4R already just today during the London session. And then later on I also took another trade here on ES. Why did I choose ES for the short? It's very simple, because ES actually cleared PM session buy side liquidity right here. Those two highs, they have been cleared on ES, but not on NQ, as we can see right here. So right here on NQ, we didn't clear those highs until, well, essentially just right now. So I was not looking for a short opportunity on NQ. I preferred the asset with the SMT divergence, the one that actually swept buy side liquidity. Then it presented a nice bearish fair value gap opportunity. I took it right here at the low of the bearish fair value gap. First short-term low as my first target, and then the midnight level right here as my final target. We continued lower into sell side liquidity, played around for a little bit, formed a double bottom pattern. And ever since from here, what I want to point out is this bearish fair value gap. We retraced into it once, twice, and then we continued lower. We hit our targets. We come back into it one more time, take out the low again, but we just wick the low. Note that we don't close below here. Immediately shoot back up. And then what do? We close above our bearish fair value gap, essentially our resistance area, key resistance area. And I think just by me drawing this very ugly line here, you can already start to see the W formation. And what do once we close above our bearish fair value gap? We come back to retest it perfectly to the tick, close above, and then at 9:10 we continue to expand back above our current high of the day right here. So really what I'm looking forward to see is that continued bullish order flow. Seems like I'm not going to be able to log into Trade Locker, unfortunately, but we can still execute here on TradingView. Essentially what we got right here is that quick expansion through buy side liquidity. We just filled in this expansion candle with no wick to the upside and only one tick to the downside right here. For us, in order, essentially not to leave behind a fair value gap, and this is what we call here immediate rebalancing. So instead of pushing higher, retracing and pushing higher again and leaving behind a inefficiency for price to come back into later, What do? We immediately retrace on this very next candle here at 9:15 to this previous wick high, so we do not leave behind this fair value gap, to then continue to expand. This is a very bullish, well, ICT price action pattern, and it's called immediate rebalancing. Immediately rebalancing a super bullish candle. I added to my position right here on this inversion fair value gap. Why did I do that? Because it's our highest bearish fair value gap right here, coming from the high of the day. We used it as resistance before, now we close above, so now I am anticipating support of this inversion fair value gap to continue further to the upside. Very similar to what we did here this morning. We clear the previous day's low. We managed to close above our lowest bearish fair value gap. We retested, and note how perfectly the bodies play along here. We close right on the high. On NQ, we actually retested the 50% level. On ES, we did not. We pushed higher, taking out the short-term low right here. Coming back. Sorry, let me mute my phone here. Come back to retest the inversion fair value gap one more time before taking it higher at 340. Leaving behind a big breakaway fair value gap. Pushing through and above the VWAP, new day opening gap right here, leaving behind a new bullish fair value gap overlapping with a inversion fair value gap. We go sideways for a little. Keep in mind that this happened inside a 1 hour inversion fair value gap right here. This is the 1 hour time frame presented by the ICT all in one. So right here, I really thought that we are going to turn around and fill in at least this bullish fair value gap. We did not. We continued to rally throughout the high of the day. We closed above our 1 hour bullish fair value gap right here at 5. Is that correct? 4:55. Yep, that's where when we closed above. And the very next hourly candle obviously came back to retest our hourly inversion fair value gap right here. So this is the new hourly candle. It comes back to retest our inversion fair value gap right here. This is that retest we just spoke about, the wick low. Then we continued higher into PM session buy side liquidity, where I decided to take on the short right here, and that all, well, fits in line perfectly with the higher time frame. Having reached a major target, we have SMT divergence between ES and NQ because NQ did not run out PM buy side liquidity, and we are just coming off a inversion fair value gap. And then actually right here at 7 a.m. my entry, we opened up a new hourly candle. So we're right here now. I'm pretty sure at least. Yeah, that's the beginning of 7 a.m. The opening right here. Yep, 7 a.m. or 6:55 close, opening at 7 a.m. We start to retrace back to our New York midnight level, this dashed line right here. And then down here at 8 a.m. a new hourly candle opens up, the 8 a.m. hourly opening. We open up with this little gap, retrace into our bearish fair value gap, take out the low one more time, and by doing so, what did we do right here? We filled in our highest hourly bullish fair value gap, and we're taking it higher from here. I wasn't at the chart at this time. Otherwise, if I would have seen the close above our main bearish fair value gap right here, I would have certainly, is it already 9:30? Yeah, it's already 9:30. I would have certainly entered long on that retest for the continuation into new buy side liquidity above the current high of the day. And that's essentially the London session recap, early New York AM session. So right now we're still in this little paper trade right up here at the high. We pushed above buy side liquidity. We failed to continue higher. We have previous day's high buy side liquidity sitting just above us. So I'm really curious to see if we're just going to cut through all those inversion fair value gaps and continue to go lower back to the VWAP. That would be a massive bullish trap. Let me see if Trade Locker loads up now. Yes, seems like it's loading up, but it's taking a very long time. Interesting. Well, our stop loss has been hit by the looks of it. With the opening, I was still busy doing the London recap on everything we've done over ES and NQ, over the future indices. We can see the same thing now here on NQ. We push above PM buy side liquidity. We failed to continue higher. This actually looks more interesting to me. I want to see if we can hold this inversion fair value gap, if we are going to close in. This bullish fair value gap right here, leaving behind a nice inversion fair value gap setup at the high of the day. By the looks of it, we are going to do that. We also have our previous day's high just above us. Yeah, unluckily stopped out. But I still think we're gonna see support right here. But that really depends on what the opening is gonna look like. Are there any questions about the recap of the London session? I've put the last 10 minutes into that. So if there are any questions, feel free to ask on the Discord. I am quickly filling up my water bottle. I will be back in no time. Hopefully seeing price having reached the all-time, not the all-time high, previous day's high. Alright, back. We're not yet at the previous day's high level. Let's wait for this candle to close in 5 seconds. And see if we get the opportunity to execute live on TradeLocker on my funding pips accounts. Otherwise, it's going to be demo trading. I reached all my profit targets already today anyway. Let's see. They're still working on improving the servers because of the surge in demand. All right, interesting, very interesting. Probably too late for continuation lower. We'll see though. Yeah, that's not gonna be. So right here, keep in mind this dashed line is our midnight level. Now we've hit our inversion fair value gap high. Looking for the inversion fair value gap setup right here, coming off the high of the day. Looking at least for a run into the VWAP. And essentially those two lows right here. Otherwise our stop is going to be hit, and we have the confirmation that we are certainly... Oh shit. Mistake happened right here. See if I can fix that. Accidentally moved my take profit where I should have moved my stop loss. Get rid of these execution arrows. If we are going to see, me getting stopped out on this paper trade, that's just going to be the confirmation of the 9:30 opening to the swing. You can imagine how many traders got lured into the trap of, okay, price is really pushing into the previous day's high right away at the New York opening, giving them enough time right here on this consolidation right at the high to enter into the market. Then at 9:30, they quickly run out all their stops. Short-term low being ran right here, and then turning it around on them, bouncing relatively off the midnight level. But this candle didn't close just yet. Still no connection. Probably a good thing. Let's see. Yes, a little bit weaker here compared to yes. We also have some internal range SMT divergence between the low right here at 5 AM and the low right here at 8:30, roughly 8:30. Because this has been cleared on ES. Like I said, if I would have seen the SMT divergence between ES and NQ, the 1 hour fair value gap being retested right here, and then the bounce off the midnight level, our key inversion fair value gap, this would have been a nice quick 1-to-1. I talked about it this morning with RM89. He's watching the stream right now too. He's currently doing a 1-to-1 risk reward system. And, well, there's nothing ever against a 1-to-1 risk reward. I love a 1-to-1 risk reward system because usually it comes with a high win rate. And your take profit targets are going to be hit rather quickly. And that's good for the beginner trader, even for the advanced trader, to just get in and out, get it over and done with, and leave the charts. Because that gives you less chances of you messing it up. Because if your targets say, I don't know, let's assume you took this trade down here at the very low. Stop loss like here, a little bit below the inversion fair value gap, and your target would have been all the way, let's say the previous day's high. Some people trade like that. 35 points on ES. Well, the chances of you freaking out, especially after we already reached buy side liquidity, the high of the day, and now you see red candles, that's just having its effect on you essentially. The chances of you paper handing, that's what we call it in crypto, and fading your analysis, especially if you still sit in front of the charts, watching price go up, watching your profit increase, and you're already sitting there hitting the calculator, waiting for, well, how much profit could I make if it's going to hit my final TP and stuff like that. Well, usually not a good thing, because once it turns on you, or once it starts to hesitate, you close out your positions early. So that's why going for a simple 1-to-1 risk reward approach does never hurt. Your targets are hit very quickly, and you can do multiples of these. Because, your targets are never really far away from where price is right now, unless you use super wide stops. But most of the time, yeah, well, beginner traders tend to do better if they would simply go for a one-to-one system. Let me get rid of last two dots right here. So right here, we close above, we use the inversion fair value gap, we place our stop below the most recent short-term low, we target a very simple one-to-one, and we're done. That's all we're looking for. Risk 0.5%, and that's a 0.5% gain on account. While everyone else looking for a 2-to-1 risk to reward ratio all the way up here, well, questioning if they should have taken profits early, and all that questioning can most of the time easily be erased with, well, taking partials at a one-to-one, or yeah, simply just going for a one-to-one risk to reward. And yeah, your trades look like this if you take them at the right, at those key levels. What really makes sense, like I said, we rejected here once, twice, 3 times. We came back up into it for a 4th time. Then for the first time we close above, we get the retest, we close above, and we immediately expand. And now we seem to be holding this support area, old resistance being flipped into support one more time. Let's head over to NQ. NQ also pushed into a new lower low, still playing around this key resistance area. It's essentially the same area I've talked about on ES without having taken PM buy side ahead of it. 1, 2, 3 touches. We close above right here. We get the retest. We hold the inversion fair value gap. And from here, what do? We push into PM buy side liquidity. It's another one-to-one trade that I took this morning. We're running. I'm joining in with the trend. I don't always have to catch reversals. Into Asia session buy side, a very obvious target. Well, and then I'm just wondering, how could we deliver into that? Well, we leave behind a discount in price. We form a high, a higher low, and a new higher high. Well, so essentially I'm just looking for the retracement into a discount to form a new higher high. Very simple. And instead of waiting for my 5-to-1 to be hit all the way up here, I simply go for the stress and hassle-free one-to-one risk to reward, and I'm happy and I can go on with whatever I'm doing throughout the day. Let's see, we've got a message on Discord. Yeah, you essentially look at the market, like you said, RM. Yeah, well, from a different perspective. You don't really, you don't sit here hoping and praying that your target is going to be hit. You're simply looking for your one-to-one, and your one-to-one right here would have already been hit. Done. You're not here wondering and praying or hoping that we're actually going to continue lower and run into our target. We're already done. Or in that case, that one-to-one risk reward trader would have already been done long time ago on the same candle actually, or maybe on the following candle, and made his profit. And all that one-to-one risk reward trader did was saying, okay, we took buy side liquidity, we inverted the highest bullish fair value gap, so I'm looking for a short of this highest inversion fair value gap now into a one-to-one risk reward, placing my stop loss at the high. Done. Doesn't have to be very complicated, and that really takes out lots of the emotions that, yeah, well, we usually have to face as a trader. So if that sounds appealing to you, trying out a one-to-one system, just try it out. Buy your Apex challenge or your Take Profit Trader funded account. Also challenge, you can't buy a funded account, only if you know what you're doing. and try it out. Risk a little bit more. Restrict yourself to taking maybe only 2 trades per day, 1 per session, and risk a little bit more on those one-to-one trades, because if you only take 1 trade with a one-to-one risk to reward, you really want to make sure that you get paid with the trades that you take. You can't be sitting here and like, oh, well, I'm gonna try this one and I'm only gonna be risking 0.1%. Yeah, you want to make sure that if you make the decision to enter into a trade, it's actually going to be worth it. And if you lose, you lose. That's part of the game. Doesn't matter. Usually with a one-to-one system, you end up having a higher win rate because your targets have a much, much, much higher probability of getting hit. While every 2-to-1 risk to reward trader right here, looking for the retracement into the new day opening gap, we're doing a live example here, is still waiting and contemplating if we're not going to continue higher into our previous day's high. The one-to-one risk to reward trader already made 0.5% to 1% profit, depending on how much they risked on that specific trade. And that's changing a lot. So the one-to-one trader, of course, you run into the danger of over trading using a one-to-one risk to reward system, because now you're already done. And once you're done and you hit your profit target, you get that. I don't know, you could compare it to the runner's high. You're just on a roll, you feel like on a roll. You're on a roll like when you're at the casinos, for example, and you're running on a hot streak. That's where the discipline and self-management really comes into play. Being able to, pull the strings, hit the close button, and just leave the charge to do whatever they want to do, because you're in relatively quick and out most of the time, even quicker. So yeah, just my few cents to how a one-to-one risk reward system could essentially improve your trading results. Trade locker still seems to not work. Like I said, between those two lows, we still have SMT divergence. So this could be our final target. We just hit the VWAP. So let's just take one off right here. Protect our stop at break even. Don't want to get caught and chop like we did yesterday. Yesterday was really painful to sit through. I took the London session long right here on NQ with the SMT divergence right here between the Asia session low and the London session low. But that was about the only clean, decent move we've got throughout the entire session. So right here, once we closed above, I got in roughly around this level. My stop loss at the low. We hit the Asia session high. That's when I secured most of my profits. Then I left the rest to run, essentially to hit. I also talked about that yesterday in the live stream, if you recall. And I set the target of 1 standard deviation of this entire move to the downside. If this target would have been hit, I would have passed my challenge. Unfortunately, I was that wise to move my stop loss to break even. And as you can see, I would have been stopped out at break even. But this is also the key area where we've been rejected right at our 1 standard deviation. So in terms of that, I was pretty proud of myself. Just happened to get stopped out at the break-even point. Still a good trade in the books. But yeah, everything inside of the New York session really would have been a pain in the ass. Not gonna lie. Alright, we managed to close below the VWAP. Let's see if we can run into our SMT divergence target between the S and NQ. Get rid of all these brushes. So far today, I think we've already had a handful of great opportunities, perfect to read with nice movements, expansions and whatnot. So yeah, really cool. And we're topping it off with another nice shot right after the New York Open. Let's take one at the look at the Euro US dollar chart. No, it doesn't look interesting today. Let's take a look at YM. YM also took the PM session high. Very interesting. 730, 830. Deep retracement on NQ here. But also perfect equal high buy side liquidity that we cleared. And now we're getting held up before the previous day's high. Take a look at the Russell shitcoin index. Yeah, well, that's about all the time we're gonna spend on the Russell. So if you didn't know, the indices, at least the US indices, they consist of the S&P 500, been trading over, I think, more than 100 years already, with $50 trillion in its entire market cap. And then we also have the Dow Jones, the 30 largest market cap stocks within the entire S&P 500 are included in the Dow Jones index, essentially. We also have the Nasdaq, the tech index, essentially, within the basket of the S&P 500. And then we have the Russell 2000 with, well, all the other 1,500, we could call them blue chip stocks. Once you heard about in Wolf of Wall Street. Very small market cap stocks usually, which, yeah, make up the majority of the Russell 2000 index. That's why it's a little bit more volatile. If I would have to only pick one index for the rest of my life, I would still say it's going to be the S&P 500, just due to its market cap. And, well, with the market cap, there comes lower volatility because it becomes, obviously much harder to move price by a lot. And it also just tends to respect fair value gaps and all the ICT concepts, price action patterns, much more beautiful than YM, NQ, and the Russell 2000 because they have a smaller market cap. They overall are just a little bit more volatile. But most of the times, that's exactly the reason why a trader would choose Nasdaq over the S&P 500, just because of that extra bit of volatility, which usually translates to take profit targets that are further away from price where it is right now, usually tend to get hit a little bit quicker. But on the flip side, also your stop loss. And because those indexes, because they consist of stocks, shares essentially, or companies, most of those stocks, they work really well with the VWAP because it's a very institutionalized indicator. That's why I make sure I always have it on my charts. That's why it's a part of the ICT all-in-one indicator. You can simply, you can't deny the fact of the VWAP being great confluence. I'm not someone who's placing a, blind buy limit right around the VWAP, hoping it's going to bounce from there. Of course, some people do that. I'm just looking at the VWAP as essentially at what it actually is, the volume weighted average price. And since most of the ICT traders don't have the volume indicators on their chart, the regular volume indicator, where you could look for indiscrepancies, like right here. Okay, we had a spike in volume, so did we right here. Well, that spike in volume was very likely right here. We see a down closing candle, that's why this volume spike is also red. But most, well, very certainly there have been more buy orders filled on this down closing candle than sells. Right here at the previous day's low, rejected, accumulated, slowly grinded up, use the inversion fair value gap to really give us that confirmation of, okay, price is really willing to reverse from here, and then it continued higher back into the high of the day. We had another spike right here, but even I don't use that. I prefer to, well, use the intersection of volume and price, and that's the VWAP. Yeah, take profit target hit on NQ. What a shame. Let me quickly check the Funding Pips Discord, what's happening there. Looking at our hourly time frame, I know I created the ICT all-in-one indicator mainly for my own needs. That's why I like it so much, but I don't have to draw anything on my charts except fair value gaps and sometimes, well, internal buy-side liquidity, except for the previous day, previous week, high, low. But just look at that. I don't have to go to my hourly time frame and constantly draw up my hourly fair value gaps and all that stuff. All I have to do is go a little bit to the right on my chart, and I exactly know what's happening on the hourly time frame. I see that we never closed above the midnight level on the hourly. Right here, the dashed line represents the midnight level, like said. And we pushed into it once, twice, 3, 4 times, and then a 5th time sweeping the PM session buy side, and we turned around. That's always an interesting confluence. Not a signal or anything, a confluence that you could add to the basket of, yeah, confluences before you take a trade. Nice. Fady, cool. Christian, Wayne, RM, did you already take any trades this session? Maybe you took the short with me right here on the paper trading account. I unfortunately wasn't able to execute, but like I said, already had a blast of a trading day. I'm not going to be the one complaining. At least not today. If that would have happened yesterday, sure as hell would have been here complaining about funding pips. Or not really funding pips, it's the platform that I chose to trade with, TradeLocker. When it's working, which is like, I don't know, 99% of the time. I think I had encountered this issue twice now. The platform TradeLocker itself is really a great platform to execute on because you, well, get the freedom to chart on a trading view chart and execute on a trading view chart while trading a CFD funded account. I really like that. I, well, prefer it over the MT5 chart, and yeah, because it just feels like it's, I don't know, from 20 years in the past, MT5 is. That's why I really like and appreciate Funding Pips expanding over to TradeLocker, and because Funding Pips is one of the biggest prop firms in the games right now, at least when it comes down to the CFD space, TradeLocker servers or their backend from that third-party platform where you execute your trades on, they weren't really ready for the load of users coming to their platform, because everyone wants to trade on TradingView. MT5 is done, it's history essentially, and only a couple of, well, I don't know, EA experts and people like that still use or prefer MT5 just because of its, well, good coding language. And because it has been around for the past 20 years. That's likely why. Well, that's just going to be a matter of time until trade lockers essentially firing up their backend. And yeah, make trade locker more, well, how would you say that? Make it more robust, essentially. Interesting. They ask you to migrate from TradeLocker to MatchTrader or CTrader. Let me check my emails here. That would be devastating. Well, nice. Well, not gonna complain about this execution from the very get-go. It's 10 a.m. now and we're collapsing. Looks like we're heading down after all, after this entire move to the upside. Let me check the chat here quickly. We caught the short, we took our partials right at the VWAP and right here at the slow. Mm. '11th of April, 11th of April, today's the 17th. What the fuck? I don't want to migrate at all. Okay, thanks. I'm gonna do that off screen while watching NQ drop here. Yeah, seems like the sentiment on TradeLocker well, not gonna waste any time on the funding pips Discord. It's usually no help at all. but I'm going to check my emails now here quickly. Would be unfortunate because I really liked executing on TradeLocker, even though the downtime issues. It is what it is. I don't really mind. No, I haven't been asked to migrate any of my accounts. Yeah, I had the same experience. I only used to trade. I used CTrader before, but that's a long time ago. CTrader Web. I think it's similar, but well, if I see that already, I just want to see my trading view chart again. I'm not gonna lie, guys. It's ugly as shit. Let me see if I can. Let's say we want to trade the S&P 500 chart type, candlestick chart. Not only hourly time frame, we want to trade on a 5-minute time frame. Indicators. Well, you didn't miss anything major. Just looking at a different platform. I mean, it's alright. You can. Let's say I want to get in with the market with my stop loss. The thing I liked about TradeLocker is that once I added my stop loss, I was able to drag it around on the chart. And right here, I would have to be really quick and say, okay, I want my stop loss at 50, let's say 70. And it's still not calculating my risk. I don't have that little input field of how much dollars I actually want to risk. Let's say I want to buy and put my stop loss below 50.50. That's likely not working due to me not being logged in. But still, I guess it would calculate all that for me. But yeah, I can drag it around on a chart. Just that little silly thing, but I really appreciate having that little silly feature here with TradeLocker. So I hope they're not going to remove it and they're just going to up their servers. Never had any issues with it during the London session, only during New York. Peak traffic time, I suppose. Let's see, we retrace towards the 50% level of our entire daily range. To the T, we're below the midnight level again. And if we were to look at it on a 15-minute time frame, what do we see? We see a possible market structure shift happening right here on the 15-minute time frame. This down closing candle would be our breaker block. We already retested that breaker block on the 5-minute time frame because we already shifted structure right here. Let me actually just a little bit busy looking at CTrader here for a second. Those were the trades we already took. Now I want to leave them on the chart. See that key inversion fair value gap again? Support, support, support. And now that we close below it, we use it as resistance to the tick. That's just why I love the S&P 500. It's not the only reason, of course. Right here we had our market structure shift. Market structure shift bearish. And we rejected off the VWAP. Now we're getting back into our new day opening gap, filling in this unfilled hourly bullish fair value gap and unfilled 5-minute bullish fair value gap. We will see if that can hold up and we just collapse and push through it. We will see. It's not like I can act on it. We already caught the short right here for a nice 2.5 risk to reward ratio. NQ looks like it's in the capitulation stage. Doesn't look right now it's going to come back and bounce from here. So we're just playing within this overall range that we've set up yesterday without taking out the previous day's high, taking out PM buy side liquidity and running back into the low of the day. That's why it's nice that if you have your target on sell side liquidity, which is already at a very great risk reward ratio, 2.58, leaving a runner to a final sell side target is always something that you can do, of course. But overall, we're now back in our lowest inversion fair value gap, even though I don't really put lots of emphasis on it anymore. We already caught the high of the day. Not able to execute on it, but that's okay. I take that hit for, well, the great platform. And I think it would really be a shame if funding pips would move away from TradeLocker. And yeah, you're proving that, RM. You just, yeah, got your first evo and you, well, your first feedback is that you like TradeLocker, and I had exactly the same experience. I really wouldn't want to, yeah, miss it. Yeah, essentially being forced to migrate to CTrader. It'd be a shame. But I guess time will tell. Time will tell. If we actually take a look on the at the stone trend, close below bullish fair value gap, come back and close right at the 50% level, continue lower from here. Nice inversion fair value gap after all. But I'm not keen on entering what would be considered a discount, not entering short in an area which would be considered a discount. If we already caught the top, essentially. Feel free to ask any questions if you've got any. Let's see. Shame. We've got a message. What are your thoughts on NinjaTrader? If I were to trade futures, yeah, NinjaTraders would be a cool platform to execute on. But if I were to trade futures, I wouldn't see the reason why I would execute on NinjaTrader, except for the possibility of using the trade copier. If I trade futures, I still use my TraderWeight accounts here on TradingView and log into my TraderWeight accounts and execute right here on my chart with simple clicks of a mouse button, because it's just very comfortable for me to do my analysis and executions on the same chart. I wouldn't like to, well, I tried NinjaTrader before and also it's not Mac native, which isn't a big issue. I've got a virtual machine to cover for that. But yeah, well, for futures, definitely the best overall platform, I'd say. But if you already, well, I don't know, I'm a one screen guy. If you already do your analysis on TradingView and you also have the opportunity to execute on TradingView, I don't see a reason why I would not execute on TradingView. So for futures, it's as simple as that. I don't think we have any more news coming up this week, at least high impact news. Pretty sure at 8:30 we had our last and final high impact news event. Today's Wednesday. Well, we have a couple of orange photo news, but I generally don't really Now, unemployment claims are going to be tomorrow. Yeah, don't really care about that. Yeah, oil news only. Not trading oil anyway. Keeping things simple. Oh, well, very pleased with today's trades. If I look at it, the initial 3-to-1 long, another 1-to-1 scalp into the Asia session high. The inversion fair value gap short we just took right here for another 2.58. And if we head over to ES, I didn't take this trade, but we've talked about it, so let's remove it. Gonna make it easier for the recap. Another 2-to-1 risk to reward short right here after we hit PM buy side liquidity, leaving behind this bearish fair value gap right here and there. Just because it's sticking out, perfectly respected. The highest bearish fair value gap here. Continue lower, retest, close below, resistance, support, support. Now resistance again, came back to retest it at 10 a.m. and boom, collapse. Close below, key inversion fair value gap. We held support here once, twice, 3 times. We close below it, we come back to retest it, paired with the midnight level, and continue lower from here. Honestly thought we can push into the previous day's high. That's why I took my profits right here at 2.58. Didn't really see the case for price to flip over completely and run back below the previous day's low, really honest. But I think if you map it out in terms of probabilities, of course, we are at the high of the day. We just took out some buy-side liquidity here. We didn't make it into the previous day's high, which also lines up with a daily bearish fair value gap. If you do your analysis, daily bearish fair value gap. That's why I really thought we could run into this before we head any lower, just because it makes sense. So yeah, well, I'd say I'd been on the rather conservative side. But yeah, like I said, in terms of probabilities, I think the probabilities of price going all the way back to the low of the day were much smaller compared to the probability of just hitting 40p at the SMT low right here. Very, very interesting. So let's take a look at oil. Going to close my eyes and trying to hit the replay button. All right. Ah, damn it. Now I've already seen what happened. But let's take a look at the New York session so far and the London session. Nah, let's just screw that part. Look at the monthly. Oh. But in terms of monthly time frame, that's just beautiful. Market structure shift. Breaker block right here. Essentially, this entire move to the downside could be used as our breaker block. Very beautiful pennant. Breaking lower, consolidating in form of a head and shoulder setup. Inside the range, not at a peak. Dropping lower. That's I'm going way back here. Essentially where, oh yeah, that's COVID dip where oil went below 0, and I think many actually defaulted on oil and got barrels delivered to their homes. Because we're short. I don't know. Don't ask me about that. But so far we've recouped from that completely. And a 1, 2, 3, 4th month uptrend. Buy side liquidity right here, sell side right here. Let's look at the daily. Because we're not a, well, I don't know, airplane company or shipping company that's interested in the monthly swings in oil prices in order to hedge price. You always have those participants, of course. Looking at the daily, this to me just looks like your typical bull flag, where price is playing around inside of. We cleared the previous, cleared Monday's low, so the low of the week. I would simply look for price to hold somewhere around the 50% to 61.8 level, maybe even the optimum trade entry. As we can see, we have 2 daily fair value gaps coming in for oil. Obviously, just looking for the trend to continue. I think it would be too early to call in a change in state of delivery, because all we've been doing recently is put in place higher highs and higher lows. It doesn't pay to be bear in the bull. We perfectly hit, now we almost hit the 0.5 level. So right here, this is our highest bullish fair value gap with significant size. Depending on how we close here, let's make this gray. This one blue for bullish. Mainly because it's my favorite color. Looking at the 4-hour time frame, did we sweep that high? Yeah, we barely did. Hide the indicator here quickly. Look at the 1-hour time frame. So I would simply be, for the short term at least, be sitting here with a bearish bias till we dig into those daily bullish fair value gaps. 5-minute time frame, but that's miles away from 5-minute time frame analysis. Depending on what type of trader you are, if you're a swing trader, I think you should focus more on the hourly time frame and where it could go to, paired with the daily, using the daily as your main time frame for your, well, longer term outlook, and then entries on the 1-hour time frame if you're at intermediate to long term swing trader. If you're a, well, long term trader, which I don't think any of us are in here, then it would be monthly, daily, weekly. But for the short term, I would use the hourly time frame, like the midterm trader would use the daily time frame as their main analysis. It's a future outlook time frame, and then entering on the 5 to 15, 1, 5, 15. Those are all the time frames that I use. I usually don't go into odd numbers or below the 1-minute time frame. So looking at the 5-minute here, we hit sell side liquidity at 9:15 a.m. So just before the market opened up. turn around without hitting buy side liquidity. Tough spot to be in between. So we right now could argue for both cases, holding support and bullish fair value gap. Right now getting caught inside this bearish fair value gap. For me, really the confirmation, and I don't trade a lot of oil, to run into those two equal highs and potentially the high of the day right here. What I would be waiting for is a close above this bearish fair value gap. If we do get that, I would place my entry like this. Likely already enter with a market order. Once we close above the bearish fair value gap right here, once I see that confirmation, get in with a market order, whether it's here, here, or maybe even here. Add on every retracement until we reach buy side liquidity. Otherwise, I would just suspect that this is going to collapse over and run into our lower targets based on the higher time frame analysis we did. Because in a sense, this is a market structure shift right here, a fractal one. We didn't sweep major buy side liquidity. This is our daily fair value gap of interest. So right here, bearish fair value gap. No, not breaker block. Bearish fair value gap. This would be a fractal market structure shift. For the continuation lower. Also, if we close above, I would look for buy side to be cleared first. But like I said, I don't trade lots of oil. Let me add it to the list still. Go back to our indices. Ooh, that's some nice delivery. See how we filled in this entire 5-minute inefficiency to the tick right here on the S&P 500, and then turned around 1020, 1025. Now it's 1030. Retesting our inversion fair value gap in here and rejecting from it. Keep in mind that on the hourly time frame, we now filled in all the discounts that we left behind from the London rally to the upside after our Asia session drop. That this could be an interesting area where we could see a bounce from, potentially. Like I said, shorting below the 50% of the daily range. Down here is not what I prefer to do. I prefer to look for shorts above and longs below. Or it doesn't always mean that I'm looking for longs below the 50%, but you get the idea. At least I'm not looking for shorts if I have that bearish bias or the bias that we're going to retrace into a discount based on daily range, like we did right here. So once I see, okay, we hit buy side liquidity, we have a nice inversion fair value gap setup with volume being trapped at the high, then it's worth a try to take a short to the VWAP into sell side liquidity, especially if we have SMT divergence paired with it. But looking for shorts here just from a very logical standpoint, if that's our entire daily range, there's just too much risk we would have to take on to the upside compared to here or compared to here, if you know what I mean. And we want to be on the lower risk side of the curve, of the risk curve. And funding pips is back online. Well, well, well. Does it mean I'm going to take a trade, or I'm just going to leave this New York session alone after catching the short? Unfortunately, not able to catch it on my Funding Pips account. Well, looking at the 15-minute time frame, not really interested in shorts right here at 10:30 with all the risk to the upside. On ES, maybe. But I also don't want to short inside the hourly bullish fair value gap. I think the best opportunity would have come if that... nah. Gonna be paper trades for me for the rest of the New York session, and answering questions if there are any questions. So feel free to ask. I think I'm gonna just leave it at this main execution here. Oil with a nice rejection. And the same goes for EU. Cleared out equal highs, but now I'm gonna focus on his. That chart looks most attractive to me, just, well, I don't know, based on a gut feeling, I'd say. If I'm gonna take another trade, it's likely gonna be on the S&P. Question is how. Because I don't really have a lot of fair value gaps to work with me. On this move to the downside. Because usually once we get the move to the downside from the high of the day, I look for a nice inversion fair value gap to take a long from. And essentially that would mean I would have to go up to a higher time frame, like for example the 15-minute, and wait for the inversion fair value gap setup to happen, or yeah, to present itself. It doesn't have to happen. There are no questions on Discord. Like always, guys, don't be shy. Feel free to ask. That's what I'm here for. I'm quickly gonna go to the toilet and I'm gonna see. Sorry for the wait, guys. I had to bring my dog in from outside because it's raining again. Where are we at? 10:45, new 15-minute candle, oil closed above. Let me take a look at oil. Yeah, pushed above. So it would be your confirmation for along into buy side liquidity. Like I said, we would enter right with market, put our stop at a short-term low. Maybe look for a minimum 1-to-1. That stop loss would almost be too wide for my liking. Put it more like this, so we can actually hit a 1-to-1 with buy side. I really like where we're at here on S&P 500. How we're holding this 1 hour bullish fair value gap overlapping with the 5-minute bullish fair value gaps. But at the same time, also don't want to get chopped up. So I'm just going to leave price where it is right now. Let's keep an eye on oil here, since we did some analysis here earlier. Let's hide the ICT all in one for a second. Not sure how precise oil is with inversion fair value gaps and stuff like that, but I guess we are soon going to find out. I think Q starting to bottom out here a little bit after taking, yeah, well, all sell side liquidity except the low of the day. Still bouncing between inversion fair value gap from this morning, which I used to catch the 3-to-1 risk reward, and our most recent inversion fair value gap right here from 3:40 AM this morning. So now we have a nice inversion fair value gap overlapping with a bullish fair value gap. Let's see how that trade plays out. With equal high buy side above. so we managed to collapse on ES finally at 1050. NQ should have already did not yet hit the low of the day. I am already at the low of the day. Yeah, at the low of the day, or cleared the low of the day, but not yet below the previous day's low. So after all, very soon we're gonna get the confirmation close below our hourly bullish fair value gap right here, consolidating at the high for the turnaround. Very interesting. Likely gonna mean more downside on the indices without ever retracing into the daily bearish fair value gap that we have right up in here. Between this low right there, Friday's low, and Monday's high. That's essentially what's creating our daily bearish fair value gap, which we never retraced into. So a little bit of a pullback after this massive rally to the upside. I'm content, and I think it's one of the most important lessons that you have to learn, especially as a novice or beginner trader, being content with enough. Not going to chase this right now and looking for another major drop, maybe for a scalp for 5 points, but that would be about it. Especially after candles like those ones. No wick to the upside. Just straight full-on expansion to the downside. That's pretty rare. Especially candles with this size. You can go back through time and look on your 5-minute time frame. It's pretty rare. I was just about to look for a potential long setup here. Lucky I remembered that I can be content with enough, that I don't have to take any further trades today. Let's just leave it at that. Taking a look at NQ. NQ now swept the low of the day. Not offering a nice entry opportunity here, even if we zoom down on 1-minute time frame. Well, no, just happened too quick, if you ask me. So right here, if you would have been zoomed in on the 1-minute time frame, what would this have been? A lower low, a lower high, and a lower low, formed by a higher high or followed by a higher high. That's your market structure shift. That's your inversion fair value gap, bullish fair value gap entry right here. We push up higher, but then we pull the plug and finally collapse. So all 1-minute time frame traders likely lost some money right here. I would have likely too. If I were on the 1-minute time frame. We hit the previous day's low on ES. Not yet the low of the day. The risk reward is just off. Even if we were to take a short right here, I would have a hard time placing my stop loss. And that risk reward is really nothing that's interesting me. Take a look at oil. Oil bounced nicely off our 5-minute bullish fair value gap. Pushing up higher. Let's see if it can continue that move. And I think with that, we're gonna end today's New York session live stream with the key lesson being content with enough and mastering that craft. Especially in a environment where, well, it's up to the trader to decide when to stop and when to take the loss, when to back the profits and leave it for the rest of the trading day. There's no one telling you when to do that other than yourself. And most of the time, if we're at that point, our ego gets the best of us, telling us that we can recover today, we don't have to wait for tomorrow. There are infinite more opportunities that we can take part in. And yeah, or on the opposite side, if we're already in profit, we feel like we're on a roll, and we just keep on rolling and keep on going until we start to forget about the risks to the downside and, well, get married to our PL and all that stuff. So yeah, key lesson today is being content with enough. We caught the short right from the high of the day, looking for, well, just a sell side liquidity right here, not looking for the full on reversal back into the low of the day, which just occurred. That would have been, but it's not even worth looking what kind of risk to reward ratio that would have been. Don't really care about that, because at this point in time it wasn't really obvious, not even on the higher time frame. If we would have seen that exact same setup, so if we were to head over here and go to bars pattern and say we would have seen this once we reached the previous day's high. Sure, because then we actually come off a very interesting area on the higher time frame. We've reached the previous day's high. We've filled in a daily bearish fair value gap. And right at the beginning of that daily bearish fair value gap, we get a textbook inversion fair value gap setup. Then and only then I'm really looking for bigger risk to reward ratios. But at this point in time, we were still playing around with the midnight opening level, this dashed line here, not having cleared a proper higher time frame area of interest, which would have been for me just being away a couple of points, essentially, 30 points on NQ away of reaching that bearish daily fair value gap and the previous day's high. Yeah, like I said, different story. Then we could have held, or we, well, at least could have, on this setup right here, take partials, take off 75% of our profits, move our stop to break even, and hold on for dear life to see if we get the full on 7 risk to reward ratio. Sometimes we get it, sometimes we turn around, and then it's really up to your risk managing and your decision making if you can turn it into a profitable day trading strategy. Now we have a 5-minute bearish fair value gap. With SMT divergence at the lows. But we're pushing up too much almost. Oil is still playing. We got a new hourly candle very, very soon. NQ already being back above this bearish fair value gap. So this would have been our final manipulation, we could almost say. This is the new hourly opening. If we, that's actually interesting now, if we do get the close above here, then I might take part of the reversal back into the highs. So let's see. Actually got a little bit more interesting. 1.5 minutes to go. Matt's preparing for a potential setup. That's what the 1 minute time frame is currently looking like. Don't care what the 1 minute looks like, to be honest, right now. So right here we are with a new inversion fair value gap after taking sell side liquidity, after clearing the new low of the day or the old low of the day. Looking forward for a potential SMT divergence inversion fair value gap setup at the low of the day, like we saw it right here at the high. Looking to add another 250 in case we touch our inversion fair value gap. We don't have the cleanest chart to work with. Right, so we filled. Let's see if I'm just getting faked out when I should have just closed the charts. We'll see, we'll see. Let's take a look at the S&P 500. The S&P 500 retested the new day opening gap. We'll see, that's gonna be a very interesting one. Retested the entire inversion fair value gap. Question is, will we hold and push back above the high now after retesting our 5 minute, or will we collapse? This being essentially just a reaction of the low of the day paired with the SMT with the new hourly candle. We'll see. We've got a message. Let's take a look at what oil's looking like right now. Looking like it won't make it. Or at least retracing. Took out the low. Not the oil expert. YM. Similar situation. This, well, relatively large 11 a.m. candle. Let's see, if we close back below the inversion fair value gap, I'm going to cancel this trade and close it out early. As long as we're holding it. Okay, nice, we respected the 50% level. It's at least something. Now we want to see this hold support. And push back above this high. And give us some sort of a left shoulder head, final manipulation, right shoulder, move to the upside. Or we're just, yeah, well, turns out that this wasn't a fake out, this was the fake out, and we just continue lower. Well, we'll see. Low risk play, got 1% online. After making 4% today, so I can consider that fair play. Yeah, say a little bit less because, yeah, well, we still didn't clear the low of the day, and it would make sense for ES to run lower and take out that sell side liquidity and fail to hold the inversion fair value gap. And then this would just be a new hour opening fake out, like we haven't seen in a pretty good time actually. It's been a while. Let's see. Indecisiveness perfectly consolidating at 50% of our 5-minute inversion, having cleared the low one more time. Two minutes to go before we get our candle close. But we're likely going to be stopped out before that by retesting the previous day's low. Damn. Could have been the same opportunity that we, well, missed on the funding pips account right here at the high. Just playing the range. Looks like we won't get it. Let's take a look at oil. Also failed to push higher. Did it invalidate? No, still inside the inversion. Interesting. EU pushing. 30 seconds left on NQ. All right. Not going to keep on holding that risk. Even if we bounce off here, that's not what I wanted to see. But it's just me. Even on ES, we closed below. So really, we would be looking forward to see that continuation lower on ES. Even if we bounce off that previous day's low, we can leave this trade open. I mean, it's always okay for me to re-enter, but I'm gonna leave it at that. Worth a try. Didn't deliver the way I wanted to see it being delivered by respecting the inversion fair value gap, immediately continuing higher. Doesn't mean we cannot bounce. We likely see, but I have to take the dog for a walk now. So that's going to be it for me. Thanks very much for tuning in today. I hope you've learned something. And even if not, we're going to be back. We're going to be back tomorrow for another live stream. So until tomorrow, could you explain SMT divergence and how to find it? Where will you compare significant lows between highly correlated assets like ES and NQ, DXY and Euro US dollar, and look for differences at those very significant swing points. Like right here on NASDAQ, we took out the low of the day, the low at 2 a.m. On ES, we did not. So I'm naturally looking for especially if we get signs of a potential reversal opportunity. Right at that low of the day, paired with SMT divergence, I'm interested to long or look for long opportunities at the low of the day with that SMT divergence, because NQ took that sell side liquidity and immediately turned around from there, compared to ES that failed to take that sell side. What does it mean? Smart money, SMT, smart money. I actually don't really know what the word SMT, smart money technique, yeah, smart money technique divergence. That's what you could, translate it to. I think you're best to just watch ICT's video about SMT divergence between highly correlated pairs and assets. And then can get down into the more specific questions about SMT divergence. All right, guys, that's going to be it for me. Dog's waiting. Take care. Enjoy the rest of your day. And we will be back tomorrow. Bye.